What is going on, traders? Welcome back to the Traveling Trader. In this video, I will be giving an update on 3 of our medical penny stocks that I've covered before. We are already in these positions. However, a few of them have upcoming catalysts that could propel the price even further. So we will review the fundamentals on each and look at the technicals as well. And I will give you some trade ideas if you guys are not already in these stocks. Our penny stock picks lately have been knocking it out of the park. We had ASTI, AITX, BLSP, High Tide, FTFT, Genius, Alpine 4 Technologies, of course, which is on the verge of no longer being a penny stock. And if you want access to all of our trades, link is in the description below. We have almost 4,000 traders in the community right now discussing trades, options, penny stocks, regular stocks, long-term picks, all day, every day. Link is in the description. It's a great value in my opinion. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these penny stocks you are already in. Without further ado, let's get right into it. The 3 medical penny stocks that are on my list today to talk about. Okay, the first ticker symbol we'll talk about is SESN Bio, ticker symbol SESN. We've been in this one since it revisited the trend line here. It's been on this super consistent trend line, but it recently broke out. So if you look at the channel, the highs and the lows have been pretty consistent, but it recently broke out yesterday, and the reason it did so is because of the impending FDA meeting. Now, if you've been following our updates on this, you know that one of the reasons we got in this was because we were expecting potential FDA approval sometime in February or March. We didn't know when it would happen. So when we bought at the revisit of this support trend line here, we were just sitting on it waiting for that approval. And now we are getting updates on that approval. So SESN announced that one of their preliminary meetings with the FDA was positive. And this is specifically for Vicinium. I won't relitigate this. We went over this in detail before. However, just know that it is a bladder cancer drug and it is a less invasive way of treating non-muscle invasive bladder cancer. Now, yes, obviously the stock is run hot on hopes that it would get FDA approval, but if it actually gets FDA approval, I think there's a lot more room to grow, and I think SESN can actually be a double-digit stock eventually. I'm not saying it's going to happen tomorrow, but it could happen. If FDA approval is in fact passed, it could be end of 2021, maybe sometime next year, we could hit the $10 mark. Now, if it does get FDA approved, then it will go through what's called a BLA. And this is just a fancy way of saying that the FDA approves you to sell your product on the market. So in my view, there's still room to grow here. We're up around 116% on our position, but we are looking overbought on some of the momentum indicators. Let me just pull up the on balance volume here. I want to show you something. So if you look at the demand for SESN, this right here at the bottom is the on balance volume. It just shows really in short, it just shows the demand for the stock in the market. And you could see that it continues to rise along with the price, which is a very bullish sign that traders are accumulating the stock as the price increases. So the way that I would play this, I would wait for the next significant dip. We could see another round of offering. Obviously, when these penny stocks start climbing into the hundreds of percentage point gains, then they use that as an opportunity to raise money. So what I would do is wait for the next retracement. Now, there is something else that you can do using options. You can buy SESN here and lower your cost basis by selling covered calls. So what does this look like? Well, for every 100 shares that you buy, you could sell 1 covered call. And we're talking about a penny stock here. So 100 shares of SESN currently will cost you less than $300. But you would essentially buy 100 shares today, and you would go out a few months. The further out you go, the more premium you can get for your calls. And you would sell something like a $3 call or a $4 call and get some of that money back. So if you bought 100 shares of SESN at $280 and you sold the $4 call right now, you could sell it for around $60. That means that you lowered your cost basis by $60. So it would cost you $220 for that 100 shares. Now, if SESN doesn't go over $4 by your expiry date, then you get to keep that money and you could sell another call. If SESN does hit $4 by that expiry date, well, then you'll be forced to sell SESN, but you'll be selling it for a profit. So you'll be selling it for $4, plus you get to keep this additional $60 that you sold the call for. So those are the two ways that I would play it. Either wait for a retracement, which doesn't sound sexy because waiting is boring and a lot of people don't have patience, or you could buy the stocks now and sell a covered call to lower your cost basis. All right, stock number 2, a stock with a similar name that you guys might be aware of, is Sensasonic Holdings. Instead of SESN, the ticker symbol is actually SENS. This is another stock that I've covered before, another stock that in our private trading group we entered a while ago, and also another stock that's waiting on FDA approval soon on their product called Eversense CGM, which is a glucose monitoring system that is placed under the skin. They already have a 90-day version, meaning it can be placed under your skin and used for 90 days, but they're looking to double that with an Eversense CGM product that extends the lifespan to 180 days. Now, FDA approvals are backed up because they're prioritizing FDA approvals related to COVID. So it's a bit delayed on this, but we as traders can potentially take advantage of that. So how would I trade Sense at the moment? Well, let's take a look at Sense's chart. Now, I alerted this in our trading group a couple of times, but specifically the breakout of this pennant here is what was significant to me. Now, this is another medical penny stock that I think will hit double digits as well. If you take a look at its fundamentals, and I've talked about this in, I think it was the previous video or the video before. I did 2 penny stocks videos recently, but their expected growth is impressive. They're looking to top 13 million in sales for 2021, which would be a 186% increase over the 2020 top line number. They recently increased the size of their share offering from 50 million. They doubled that to 100 million, which is exactly what you want to see from young penny stocks, especially in the medical field, because they tend to burn through cash quickly, especially in the medical field. And so they need to continuously raise money. But what you want to see is you want to see the volume continue to grow as they raise money, right? As they do these offerings, you do expect the price to fall after the offering because it dilutes the shares, which is what you see here. So the demand for the stock has bounced back beautifully after that dilution. In my view, I think that you can start a position on Sense here and just continue to dollar cost average. And you could do the same thing as I described with SESN, because Sense also does have options. So you could very well buy 100 shares of Sense and sell a covered call against it. Right now, you could sell the, let's just say the the market isn't open yet, so this pricing is a little janky. But you could essentially go out to April or go out to July and sell the $5, maybe the $6 covered call on it and see how much you would get for it. But it would essentially lower your cost basis. And again, if Sense never hits that price, you get to keep that money. You can then sell another call. If it does hit that price, you will be forced to give up your shares, but you're going to be giving them up for a profit. So it's essentially a win-win. Okay, stock number 3 is ZOM Medica. Now, this is another one that penny stock enthusiasts are familiar with. And the reason that I'm bringing this up now, even though it's run up quite a bit since we've entered, is because they recently did an offering. I think they did an offering yesterday, if I'm not mistaken. Yeah, they secured $173.5 million in their offering, which again, as I said, these young medical penny stocks, you do want to see them continuously raising cash because cash is what pays the bills. So they have to, on a steady basis, raise as much cash as possible as their stock price continues to grow. And that way they can pay some of the bills and put that money into operations to further expand their business. All right, let's take a look at how we would trade ZOM at the moment. Now, again, a lot of you are in this if you are in our trading group or if you've seen some of my videos or even from your own due diligence. Right now, ZOM is up 168% since we got in, a breakout of the pennant, almost in a similar fashion that we saw with SESN. And again, the on-balance volume is what I'm looking at. How much demand is there for the stock in the market, even after an offering? Now, you see this orange line here, it's because it dropped pre-market. So ZOM is actually down about, about 20% pre-market at the moment. And this is the type of weakness that you want to buy into. We could see further drops in the coming days, but essentially you want to take advantage of this 20% dip here. Now, what could happen, obviously, because of the offering, is we could see a continuation pattern in the same way that we formed this pennant before. So we could see ZOM do something like this, which is a continuation pattern, allow the momentum indicators to cool off a bit, at which point, again, it would present a lucrative buying opportunity. Now, unfortunately, ZOM does not have options, so there is nothing that we could do from that perspective to lower our cost basis and try to get creative with it. But like I said, you do want to buy into weakness on here, especially because it shows that the market does have demand for these shares. Now, I'm less bullish on ZOM as I am the previous two, SESN and SENS, because the overall market for companion animals isn't actually that big. Even according to ZOM itself, that the market for companion animals should reach $2.8 billion by 2024. Their niche isn't as lucrative as, say, cancer treatment or blood glucose testing as the previous two stocks, and its current market cap is already above $1.5 billion. So if the overall market itself is worth around $3 billion projected, then it is already running a bit hot, but that does not mean that we can't trade it. I do foresee about a $4 to $5 price target for ZOM in the near future, but I don't know that I'm going to hold that as a long-term investment, as I will for sure Sensasonics and SESN Bio. Anyway, traders, that is it for this video. Again, if you want access to our trade alerts, link is in the description below. Leave a comment, let me know which one of these you are trading, which one of these you are in, and if you have a difference of opinion than mine. Leave a thumbs up if you got anything out of this video. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.